boy. Hey, good morning. Let's do some Forexing. G'day, mate. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, never risk money cannot afford to lose. Hello, my name is Wayne McDonald. I'm a currency trader just like you. And I've been on this journey we call Forex for close to 20 years. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur. And then before that, I was in the nonprofit world. And before that, I worked for NASA. And before that, I was a baby. Just a wee baby. So anyways, there's my whole life journey. And I'm glad you're on this journey with me. If you are here to learn all things Forex, technical analysis, fundamental analysis, trader psychology, and maybe even just a few songs and dances, then that's cool. You're in the right place. This is a community of 18,000 foreign exchange traders. You know what? We've all gone through somewhat of the same journey, so we can learn from each other and stand on the shoulders of giants. There's no reason for you to try to reinvent the wheel. Society has progressed since then. So anyways, great. Ask questions, get involved, treat each other with respect. This is a professional environment. You are in my office. Okay? Very cool. I'd like to thank Traders Way for being part of our community as well. You're going to, in your business, your Forex business, you're going to need service providers like someone that holds custody of your funds, someone that works with liquidity partners, and then someone that executes trades and manages the servers and manages the software and all that kind of stuff. Traders Way has earned my loyalty and respect. Perhaps they might earn yours. Okay? Think about it. They value education. Why? They want you to succeed because it's good business for them and for you. Tradersway.com, yo. Tradersway.com. Open up a demo today. There's no cost for this webinar today. It's not going to cost you money anyways. But it does come with an obligation to visit tradersway.com. So namaste, FT9. I was doing some research in regards to blockchain and crypto yesterday. By the way, I didn't realize that was Zurich. I've been there, dude. I've been there. Look at that. That's cool, man. Gotta go back. Anyways, I was doing some research in regards to my MIT stuff and, the impact of blockchain technology and finance. And then I thought, hey, look, it's all in the mix, how monetary and fiscal policies work or fail together. And I thought, hey, maybe you'd like to read that. Okay? So the English, right? The International Center for Monetary and Banking Studies. Chad says, hey, does the 5-8 cross work on all time frames? Yeah, they always cross when the short is faster than the long. Okay. Now, you're asking what you're actually asking, are they suitable for pulling the trigger on all time frames? Well, yeah. Okay? Yeah. But the thing is, do you want to use it? Remember, the 5-8 cross is just a trigger. Okay? If you don't know how to aim, okay, it doesn't do you much good. Anyways. Libor says, I downloaded it yesterday. What do you mean you downloaded it yesterday, Libor? Yeah, mate, and probably for the same reasons that I don't like Elon's participation in the industry, or at least the way he's doing it. Well, there you go, right on LIBOR. That's just funny. Uh, Only because that's not a resource I use, but LIBOR's on it, so right on. Okay, okay. Great. What's going on? Well, yeah. Okay. Swissy strong. U.S. dollar neither here nor there. Japanese yen was strong and is giving back some. That's fine. Aussie was strong, has given back. Pound was strong, has given back. Kiwis was strong and given back. Euro was weak and now is strengthened. So over the course of the last 24 to 48 hours of trading, let's say going all the way back, a couple of hours after non-farm payrolls, nothing really should have happened in your account. Maybe you made some money because you made some shorter term trades, but it wouldn't have been a lot. I don't think you would have made 27 trades since, NFP, all of which you scaled out 30 or 40 pips each. Maybe you did. Maybe you squeezed out those 1,000 pips. If you did, awesome. But more likely than not, nothing's really happened, right? And I'll go back to where am I sitting here? Yeah, 2,000. So I have 7 trades open and have given back 100 pips, which on 7 trades, you're talking about 13 pips or 14 pips, right? So per trade. So really, by and large, nothing's happened, which is good because that's what this says. Theta says, so the market may keep sleeping until the Fed. Yeah, maybe. We don't know. Okay. Chen says, I'm pretty cool with COD. Define COD for me. Okay. Alton says, when nothing's happening and you still try to make money, you end up losing money, at least Alton does. And yeah, I find bad periods of trading for me and what is when I'm trying to force, a Rubik's Cube through a round hole, right? You're trying to force trades out of your belief mechanism, your confirmation bias, your need to make money. Ultimately, the danger is sometimes that works, right? But ultimately, here's what I'm thinking, okay, is that you trade what you want, and sometimes that's necessary in the sense where you have a belief that the markets are about to move. This is based on your analysis. This is based on your understanding of seasonality, potential market volatility about some event coming through. For example, I might start buying a market in the 3rd week of August because I anticipate new flows of money coming in by September. Doesn't mean I know it's going to happen, right? So if you made some trades because you felt this week was going to be a great week because we're in this paradigm, not paradigm, but perineum, between between FOMC and the Fed, the NFB and the FED, that this would be good volume. Okay, great. So how that starts is you place a bunch of trades, ideally with good setups. Sometimes we get a little sloppy or a little aggressive and we take mediocre. And then sometimes that works as a first stage. Okay? But if you made a bunch of trades yesterday and they're all sort of break even, a little bit of profit, a little bit of loss, they're just floating around, that's okay too. because you haven't denied your assumption of future volatility, but it's not working out. Okay, that's the good case scenario, right? You placed 5 trades and they're all sort of a little bit profitable, a little bit losing, by and large, nothing. What you don't want in a period like this, guys, and it can happen, and it has happened to me, is that you make a bunch of trades, they don't work out, you make some more trades, they don't work out, and all of a sudden you look back and you're like, oh my God, well, over the last, 12 trades I've made, you've actually lost 180 pips. And then you're like, wait, but nothing's happened. Okay. So what you always have to remind yourself is you use technical analysis to confirm or deny your hypotheses. It's okay to be aggressive, but one of the things I cover in the swing trading group all the time is know when you're wrong. It's easy to know when you're right because you've already assumed it. Of course you're right. You've planned it. You've done your analysis. You have experience. Of course you're right. That's the easy part. The more difficult part is having the strength and the confidence to see reality, to say, you know what? I thought more would happen yesterday. I better wait to get that confirmation. Right? That kind of stuff, right? Cool. All right, so that's all. That's all. Don't make a big thing of it. Just don't lose a lot of money, right? All right, so we're just sort of, here we are on WTI. Okay. So you have to ask yourself, was 70 the top? Well, it definitely could have been, right? Psych levels are very important in these markets. Okay. And that's where for example, when you get near a psych level, you could assume, okay, remember, anticipate is a better word than assume. Anticipate areas of consolidation or retracement. Because somebody could buy it at 60 and target 70. Why? They're just psychological numbers. What you don't want to do is make money on the way up and now force a bunch of trades here and then give a significant portion of your profits back because you're stubborn. Okay. Theta says market getting ready for 100. Yeah, potentially. Theta says, is it better to stay away from trading at this time? Never is that the right answer. Okay. You are a professional trader. Your job is to sit your butt down and be ready, willing, and able to carry out the strategies you've already created. Okay? But the market conditions may not be favorable for your execution of trades. Okay? But this idea of stay away, no, stay at your desk and prepare and analyze and do the job. Right? Remember, at some point, someone is actually going to pay you money to do that. Even if you have to sit in front of your desk and do nothing for 4 days, it's still your job. And they'll say, oh my God, I'm so happy to be paying you money, right? To sit in front of the charts and be ready, willing, and able to execute plans while I sit on my yacht. Well, you know what? That guy's got a yacht. He's earned the right. You're collecting money for doing your job. So do your job, right? So anyways, I know that's not quite what you meant, Theta, but I'm still making a point for everybody. All right, so going back to this, is 70 a key psych level? Oh, for sure. For sure, yeah. Okay, what does the price action tell us? Up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, up, down, down. Is this the same market conditions as before? Or is this the same market conditions? Do you buy with the same fervor? Man, that's some good coffee today. No, something in the market conditions have changed. Notice we have no price moving averages. We only have market and trend. So the market is still bullish. The trend is still bullish, but something in the price, right? AKA current market conditions has changed. So you must adjust. Okay? Another way of looking at it, you might do a statistical analysis. Okay? Okay? Going back to whatever time frame you want. Guess we'll do that one, and then we'll do this one. So the previous period had a much greater slope. Okay? M is greater than 0. Here, M is greater than 0, but closer to 0 as well. Something has changed. And it shows the vulnerability, like if you go back a little bit, right? It's still pretty reasonably flat. Okay? And the shorter time frame you go, the more bearish it looks, right? In this case, M is less than 0. Okay? So typically what I do here, fellas, ladies and germs, is you want to look at it this way. Because somebody asked me, I think at NFP, do I use trend lines? And the answer to that is generally no, because that's too subjective for me. So in this case, what I'm doing is just acknowledging the trend is in consolidation. So fundamentally, nothing's changed in my humble opinion. Okay? Seasonality still, right? This line here is based on seasonality. Okay? None of this stuff here has changed in my analysis. Okay? Okay, M is still greater than X. Okay? And M over here, which is a different M, is up. Okay? So therefore, my thesis is still the same. The price of WTI will likely go up. The question is, are these the right market conditions for buying, right? And if so, at what time and what price? Well, trapping it this way says, okay, we're going to trap it in a consolidation range. Okay, you following me? So I got a couple of choices here. Okay? I'm anticipating something closer to that. So I could buy low, or I could wait for the breakout and catch the pullback. Okay? Now, you ask the next astute question, and you're like, but what if it comes down here? Well, we'll have to deal with it then. It's irrelevant to me as a bull because I wouldn't be buying it as it's falling. Okay? So my job is to identify the next level of support. Now, do I have pivot points and stuff on here? No, so you would add that as well. Okay? But right now, I have to acknowledge, okay, that the market conditions have changed, and I need to temper my enthusiasm. I must adjust for changing market conditions. And that was the basis of my book, wasn't it? That a lot of new traders, they never adjust their expectations for changing market conditions. What's up, Mikey? You got it? Cool, right? You're welcome. Gold. Okay, nice, good, fine, fine, good, fine, good, great, good, fine. What do you see here, fellas, ladies and germs? Everything's working as it should be. Okay, Here's last week's trade plan. Okay. And now here's this week's trade plan. Good. Fine. Good. Great. Good. Good. Okay. Okay. You like it? Okay. What did I say? Wait, what did I say? This is June 4th. This is June 7th. This is June 8th. I'm sorry. Did I say weekly? Yeah, it's daily. Pete says, love it. But it's one of these things like, if you're looking the wrong way, you're not going to see this. Okay. Right. Libor says London session trade. Yes and no. So I teach you guys, or have taught you guys in the past, that this is the time of day to be trading gold as a U.S. trader. Yes, there is a London session move, but I've taught, right? And by 10 a.m., right? By 10 a.m., I suggested you'll catch, 2/3 of the average daily range. But you could do it in the first 2 or 3 hours of trading. Okay? Give us some call outs. Well, since I've taught you how to trade using pivot points, for example, and I've outlined these pivot points, right, with clear indication, this was non-farm payrolls, by the way, of a higher high, and I have this set up on Friday, outline the buy zone. Okay? That's clearly an opportunity for a Monday entry, but I've also taught you pivot points, and these are daily pivot points. And I've cleared out all my pivot points so that there's only buying information here, which is an indication that I'm only looking to buy. Okay, everything YouTube? So the higher high, which I covered on NFP at FX Street, created the looking for the higher low in a Fibonacci sweet spot, further highlighted by daily pivot points, only showing buying opportunities. Okay? Followed, so that's Monday's entry. Now Tuesday's entry, which is today, is also highlighted only as a buy. There's no information on this chart that says sell. All it says is if you're a bull, this is your price, 1893 to 1888 or something. I can't quite see it. Okay? But that's what these are. Okay, everything YouTube? That's what this is. Which, here's the interesting thing that you might like. Under current market conditions, which will change, by the way, between now and the end of the day, this is tomorrow's buy zone. But this is dynamic now. This is static. So what this is saying is based on what happened the day before, if you extrapolate that data out, today's high is going to be somewhere up here, which is then going to move this dynamic buy zone for Wednesday probably higher to somewhere around here. Which means, let's talk about tomorrow, everything YouTube. Tomorrow will probably look something like this if we hit our target Okay, if we hit our target and you're a bull. Okay. So all I could do is really guess and say, well, if we have this, if you do the math, a weighted mean, if it closes high, will be about, what, 60% of the range down to about 50% of the range. So I can eyeball this and we'll just say, how about that is tomorrow's trade plan? There's the call. Okay? I'm not saying it's going to happen, but I'm teaching you how to trade so you don't need to log into YouTube and beg somebody to tell you what to do. You can be a big boy and create your own trade plans. Okay? So, yeah, if it was up here by the end of the day, the math would dictate this would come up, and you'd probably catch a roll reversal buying at 19 as support. What do you stink? Yeah, boy. Elmer's bearish on Natty, huh? Okay. Do you have a rule on front running next week's pivot zones? Does it have to be late? They're more accurate, Elmer. They're more accurate. Okay. 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 How long should you hold it is what you're asking everything YouTube. Well, let's take a look at that. So remember, these are not questions. These are decisions. They're not questions. So if you bought way late, 2 or 3 days late at a breach of 1900, how long do you hold it? Okay, well, let's see how much juice is left. So now let's change your time frame and say, how about bullish swing trading bias? Well, you should be able to take this, I would say, to 1916 as a conservative target. So if you bought a breach and a pullback tomorrow, yeah, you probably get 15 to 20 out of it. Okay. Okay. Now he says, now check again, everything's down. Well, what does that have to do with your bias? Everything's down. Good. Well, if you're a bull, you want to buy it. You don't want to buy a falling knife, but you want to have value. So if you're a bull, then you like the fact that it's low. Okay? So I'm taking that as part of the assumption. Okay? Cool. You got it? So that's the conservative target, but we can adjust this, and I'll leave that on there. And let's take it out a little further and see if we can get an overlap. Okay. So here's the thing. This was your buy for the month. Okay? That's the projected low for June if you're a bull. Now, it can go a little lower, but now that it kicked off, then you're going to assume that that's your low. Okay? Here's the cool thing. That happened June 4th. You knew that way back in May. So it's not like it just occurred and now we backfill. No, if you're using those tools, then that's how you do it. And here's the cool thing. Your target there, okay, is not 1916. Your aggressive projected top. See, that's the projected low. So if that is true, think of it as an if-then statement. If this is truly the low, then the projected high for June is 2008. The conservative projected high is 1982. Why don't we just split the difference and say 2,000? So, okay, your first entry's there. If you catch a higher high, higher low tomorrow, your choice is to go for 1916 or 2,000. Do you want $100 or do you want $15? Okay. Your customer says, can you show us a proper pattern there? What do you mean? Who's teaching you patterns? When was the last time I said you have to have, when was the last time I said look for a pattern? What pattern do you want? A morning star pattern? Yeah, how about your price? Okay, buying's the easiest part of this. Okay, look, you're there, buy it. What if you lose money? Who cares? If you're over leveraged, it's a lot of money. Then you have a problem because you're over leveraged. But why can't you just buy it? You have a 50% retracement. You have a pivot point. Okay. You have your price. Why can't you just buy it? Now, my book says if you want to, right? If you want to, you use a 5/8 to pull the trigger. All right. It's a little slow, but I certainly wouldn't do it on a 30-minute chart. But if you're down in here, use a 5-minute chart. So something like this, a double bottom. There's your pattern. How about the next one? Higher high, higher low, 1, 2, 3. So you buy there. But all of those are just, right? The hard part is knowing this. Okay? You see? So someone might buy it here. That's fine. Someone might wait for the double bottom and buy it here on that 5/8 cross. That's fine. Someone else might, okay, look for the higher high after the double bottom. We call this a 1, 2, 3. So you would do this, and now they would buy down here. That is also fine. I don't really care. That's the easiest part of this whole thing. Okay? Okay? Because you could just have nothing. Just you simply buy it. Okay? Because think of it now. You are a trend trader buying gold. You have fundamental reasons why you believe gold is going to go up, both in terms of dollar strength or weakness and demand for gold. And you're trading patterns on the way up. By pattern, I mean trend confirmation using monthly pivots, weekly pivots. Now you've drilled down to daily pivots. You have yet another higher high, so you expect a higher low. You drop into your pivot points and say, well, somewhere in here is all good. This one, this price being an important price, this one being an important price, but you were already breached earlier. So now you're like, well, I'm in my sweet spot Fibonacci-wise. I'm in my sweet spot pivot-wise. I'm incorporating things like time of day and other reasoning to all of this. Okay? So you buy it and you put a stop. Like, there's nothing to it. Right? Most people get so caught up in their technique of entering that they never enter, which is simply tactical. Okay? Your strategy is much more important than your tactical entry. Yeah, you don't rely on just pivots, right? So check this out. Okay? You have a higher high. Are you going to buy a higher low? That's it. At what price? Okay? Pivot points are just another tool, right? Here's what I do in the price action course. Okay? Here's what I do, right? I say, buy the dip off the roll reversal. Done. So you buy it, put a stop loss. You're like, well, you know, Wayne, I'd have to have my stop 33 pips away, and there's only 22 pips potential profit. Then don't take the trade. Okay? But when you're doing proper technical analysis and proper fundamental analysis, right, then risking 33 and going for 99 is not a big deal at all. And in fact, that's a small day trade. Okay? In the swing trading group, we're typically going for 333, risking 33. Okay? And if we only get 222, it's kind of disappointing. Okay? But a basic simple is you're risking 33 pips, you're going for 99. That's a nice little day trade. Okay? Right? We call that an Asian fade. Pretty typical. Okay? Pretty typical day trade. All right? But you have to have, right, the stop. Now, the interesting thing is so many people are caught up where they would rather cut off a hand than take a 33 pip loss because they're trying to have a 100% win ratio, which makes no sense. Okay? If you're learning how to be disciplined and patient and set up good trades, well, okay, now you're testing something specific. But ultimately, nobody cares about your win-loss ratio. Nobody cares. Nobody said, well, you make 40% returns consistently year after 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 year. However, I don't like your win-loss ratio. Right? Like, nobody cares. Okay? And you're like, Wayne, I'm making 400 a year. Well, you could be the best currency trader in the world and live off 40% a year, so just lower your leverage. Okay? So, if you're trading properly, so like, again, your trade plan for the day or whatever for this period is you're going to trade a roll reversal, what we call a price action trade. So you're going to buy somewhere in there and then you're going to drop a stop. Then you look at how far away your stop is. Okay, I'll just say 33, for example. And you have to say, well, will this potentially produce 99 to 333 pips? If the answer is no, you have to ask yourself, is it worth the risk? That's how I'd rather you think. Okay? Yeah, if you get knocked out on break even, perfectly fine. It's a failed trade. So, right, you're good. Don't worry about it. You're going to have 100 looks at it. Okay? It's like being a professional basketball player and you're taking 3-point shots and you miss the first two. Now you doubt yourself as an NBA player. Instead, what you should be doing is knowing that you've practiced so hard that the third one is going to go in. You're still saying, give me the ball. I'll get open. Okay? Missing is part of the game. Okay? In one of the training courses, I use Reggie Jackson, one of the most famous baseball players of all time. And he has the record, okay, for the most strikeouts in baseball history. Nobody has struck out more than Reggie Jackson, who's in the Hall of Fame for being such a good player. Okay? But he also got on base a lot, and he hit a reasonable amount of home runs. Okay. Think of it as an athletic sport. You're going to have losses, but the thing is, you don't want to like lose the game for the rest of the team. Okay? You're going to take a lot of shots. Okay. No, it's just a 5-minute chart. Okay. All right. So we had a question about nat gas. Okay. So let me just put it this way. This is a top. So we know this is resistance. And the pivot point is confirming that because it can see resistance. That's why the pivot points are so good. They're just helping you see what you might not be looking at, but the math is doing the math, right? So for example, in calculating pivot points, you're going to have the highest high, plus you're going to have the lowest low, right? So you're going to look at the lowest low, you're going to look at the higher high. Even if you don't see it, it's going to be calculated, meaning we're on a 4-hour chart here. If I drop into a 15-minute chart, those are still monthly pivots. And you're like, well, are people selling because this is a monthly pivot? Or are they going to sell here because it's last month's high? The one you can't see to the left. Well, again, the math is just doing the math, so it doesn't have to see. So somebody said they were bearish on nat gas. So let's talk about that. Okay, how do you set that up? Well, this might be an okay place to sell, although that would indicate we have an inside month. So it's not ideal. But if you're a bear, well, there's nothing else for you to do. Okay? Right? I don't know why you want to be a bear. I don't care. I'm not saying you're right or wrong. Okay? But this isn't a great place, but it could happen. Now that's on a monthly basis. The second part here is this is a bullish profit zone. So if there are bulls, you have to think like a bull. You have to know what a bull is going to do before they've even done it. So let me explain that. This is the one bullish price for the week. Okay? Did bulls buy it? Well, you would have known that price on Friday. Okay, you see? So, we can assume that somebody bought here and a follow-on trade here and a follow-on trade there and a follow-on trade there. That's all price action. All of those are very basic, easy price action trades. Based on one strategy, this is the best bullish buying price of the week that you could possibly hope for. That's the one you were praying for. So clearly you caught it if you were a bull. Now, if that are true, what is their target? Their target is 3.1540. Okay. So going back to the person that said they were a bear, well, somewhere in this zone, I will now do it with the square, somewhere in this, you would look for a reversal. I didn't say sell. You shouldn't sell an uptrend. So instead, you should look for something like this. Okay? Now, you're like, well, Wayne, by the time that's happened, that's a whole day's worth of trading. Well, don't do it on a 15-minute chart. Do it on a 5-minute chart. Okay? Okay, and so now we're very zoomed in, and you're looking for anything to confirm significant profit taking, not bearishness. Understand me. You're a bear, but the market's bullish. Nobody's going to sell a bullish market unless they're mentally deranged or just clearly have no idea what's going on. Okay? You'd have to be a fool to sell an uptrend. You have to think about it that way. What kind of fool would sell an uptrend? So if you're a bear, you just say, well, you want this to come down, but not yet. You might get the right price, but it's not the right time. So the first thing is to confirm if you hit this and the next candle looks like this, what's happened? Think about it. What happened to generate that? So here's a big candle, great. And then all of a sudden the next candle looks like this. What took place? Profit taking. Okay? So maybe, just maybe, if you were to trade this, you're short here. Okay? You see? You have to know when to be ready, willing, and able. Okay? And that's likely to occur on multiple time frames for a while. So going out to the 15-minute chart, you know, you'll probably get like okay? And it'll take 2 or 3 days to pull all that through. That's why I'm a trend trader, because that takes a long time. Trading with the trend, you just buy the dip. It's not that complicated. Okay? Like, think about it. A bull now on nat gas, they start their weekly analysis and they're like, this is the trade. Like, it's not that complicated. And they're like, okay, higher high, higher low, there's the trade. Higher high, higher low, there's the trade. Higher high, higher low, there's the trade. Okay, now you're up in here and you're like, profit, and you walk away. Now you're done. What happens next? Who cares? Like, who cares? Okay. Notice the monthly plan. Do you know the monthly plan? It's going to 3.3. Okay. This is the projected top for June. We're on our way to 3.3. So now this bear, whoever's in the market is a bear, really doesn't have a lot going for them. I'm not sure why they're a bear. Now they're looking at it fundamentally, obviously. So is this a good opportunity to sell nat gas? I would anticipate some profit taking here, but currently the next technical trade is this. So, no, I don't know. No, it doesn't look very good for a bear. A bear would need to be careful because most likely it does this, then it's going to do this, then it's going to do this, and then it's going to do this, and then it's going to do this, and then it's going to do that. Okay. So instead, I would wait until M is less than 0 on some level. Okay. Okay. Great. Correct. Negative slope. Well, that's what M is, right? Little m, slope. Okay. I bought some Bitcoin. So we'll see what happens here. No particularly good entry or anything like that. It's more like I'm playing with it. Okay? I'm playing with it. But my entry is right here. Yeah, someone asked, what is M? Let me cover that just briefly. Okay, in statistical analysis, you will know that Y is equal to MX plus B, where M is equal to the rise over run. Okay, X is the x-axis, Y is the y-axis, B is the intercept. Okay. So the question is, what I was saying is, if you're analyzing M, small m, not money supply, okay, and the rise over run, so to say it differently, if the slope is -3, it's technically bearish. Okay. Okay. If M, right, if it rises more over the run, if it rises up, okay, it's going to be bullish. So you have to think of this sort of as calculus, if you will. Okay. All right. Okay. If we're looking at it quadrant 1, 2, 3, and 4, you'll notice that this rise, right, over a period of time, this is a negative slope. Okay? So that's bearish. Or if it looked like this, okay? Oh, right, rise over run. It's positive. So that's bullish. Okay? Okay. Cool. Aaron, just join FX Bootcamp. Right? Pivot points are well documented in 2 or 3 or 4 of the different trading courses, depending on the strategy being taught. It's all there. I don't need to duplicate it. All right. So just want to point that out. We'll see what happens. Take a look at, I don't know, look at the exotics. Okay, this one had a higher move. Okay. I have it marked at 1350. Obviously, it's gone a little higher. Okay. Peso still doing quite well. Okay, post NFP, second chance. There's the role reversal. Okay, Oscar Mike. Take a look at yen pairs. Okay, still in a buy zone, kicked off a buy zone, right, rising back up. I got to put it on a different time frame though. Okay, we'll do it there maybe. Okay. Okay, you see, just once again, doing its best to stay above the buy zone. So a lot of these are not producing, but they're not producing. Okay. Pound showing vulnerability here. Okay. Pound showing pound showing vulnerability where you have the higher high. So you would anticipate the higher low. I typically look left here and use a role reversal as a guide. And we're still there, but pivot points are doing other measurements. And it's suggesting mediocrity, I suppose, right? So once again, like I showed on, what was it, gold in the beginning? That something seems to be in the mix of changing. So you got to be careful. Something very similar happening on Kitty CAD, right? Something very similar happening on Kitty CAD. You don't want it to be any lower than this if you're a bull. You're running out of support zones. Okay? We could change this and go back out and look at like position trading, right? Position trading, bullish bias, and we still don't have our entry. So if you look at the conservative entry, you might have done a front run last month. But for those that, for those that are still waiting, okay, that's still valid. So you have to decide where do you fit currently between your strategies. You might be disappointed with the swing trade, but you're okay with the position trade. And so how do you use day trades to enter or exit while still maintaining the integrity of your market analysis? Zipping over to US dollar. Okay. Oy vey, look at this. Just all over the place. Okay. Pound. Okay. Just still farting along. There's yesterday's potential entry. Okay. And in this case, we're still on the inside of the range. Okay. Because we've now lack the integrity of the trend and instead have range, I'm going to remove that entry. Okay. And let it play out. Well, what I expect to happen, is up. Okay, range, breakout. Okay, that's the key flag. Pullback, gone. So you got two choices of what you can do. It's not a tough decision, as you can see. I can blow you away, or you can ride with me. Said I'll ride with you if you can get me to the border. The sheriff's after me for what I did to his daughter. All right, anyways. Okay. Okay. Make sense? Brendan says, can you explain the equation? It's in the macroeconomics course. Okay, the money's, okay, the money supply times the velocity of money is equal to nominal GDP times inflation. Okay. And it's the quantity theory of money. Okay. Coolio. Let's see. So Aussie, again, on again, off again, hot, cold, cold, hot, cold. Okay, great. So we'll see if what this does. It's hanging. Yeah, I don't know what to make of it. I can't lose money on it, so I might as well just, right? I don't have enough profit for it to statistically be relevant, and I can't lose money, so I do nothing. I do nothing. Looking at euro dollar, I like this trade. It's all right. I can't lose money on it. It's not performing the way I would like, but I think it will. Okay. Right? You see? Like, again, not enough profit to care, but it's a good trade. This will probably, the probability of profit is reasonable because I'm including things like next week's Fed meeting in my analysis. Cool. Okay? Cool. So this should go up. It should. It probably will. So I'm good. I'm fine. It's all right. Okay. The other one's down there at 19. Cool. Cool, buddy. Right? It's nice, right? Okay, anything else going on in the world? Plan A, still working out on the Noki. Nice. Okay. Sell it at 8.4. Target is 8.0. We're at 8.25, so we're 150 pips into a 400 pip move. It's not bad, right? Okay. See? So I'm okay on the monthly. I'm okay on the weekly. Okay. This is even potentially an entry if you were trying, if that's what you wanted. You can see it's a role reversal. It's only a higher high relative to this, but you could be climbing this ladder. Okay. Okay. Nice little weekly trade plan. You already looked at monthly on the other chart. So now you can say you're golden on the monthly because you know this is inside the buy zone for the monthly. This is a beautiful setup on a weekly if you're already in on the monthly. So I could be buying here. Then you drop into your day trading. Okay. And, right, let me clear this up. So we have tomorrow added. Okay. And now you're waiting. Okay. You can see how beautiful this day trade is. And depending on what happens today, tomorrow's entry will occur. But I can tell you, if we're going here, I'm going to want to buy it over here somewhere. But that's what the pivot's going to do too. The pivot's going to move up if we make the higher high. How do I know that? Well, I'm calculating the pivots in my head. Okay. You see? So down here was the monthly entry. Okay. Here, this was a weekly entry. And now here's your daily entry. So it's like one of those things like, what more do you need? So here's one entry. Here's the next entry. This might be a current entry, so on and so forth. And then, of course, what's the target? Go all the way back now to the original plan. This plan, the one on the bottom. So you go back and you change it back to monthly. Okay. And you see the target. What a beautiful trade. You're welcome. So if you get this right, okay, if you get this right, and then you get this right, which is the weekly, and you get this right, which is the daily, the theory is if it continues up doing this, living this to its fruition, that it'll carry these others as well. It's sort of like they're all different boats. This one's a little boat. This one's a medium boat. This is a big boat, but the tide is rising too. So the ultimate potential, M2 predicts M4, is 123.85. So here's the example. You could, on this one, target, okay, 123.85. On this one, that's your day trade. This one is your weekly swing trade. You could target 123.85. And this third one, the target is 123.85. Okay, now let's go back through and reverse engineer it again. What's the other target for weekly? Okay, well, this one says you could, okay, this one says you might want to consider getting out a little earlier. Okay, reverse engineer everything again. Okay. And this one says here. Okay. Now, here's the multiple time frame analysis and the conviction for your trend. This is the logical target based on that analysis. This is the logical target based on that analysis. This is the logical target based on that analysis. They're all correct. However, can't you fold some of this into that? Like, for example, if you bought it down here, instead of taking profit on this, maybe tomorrow will look like that, which now will get you to the weekly. And if you get that correct, then maybe it does this, and then it does that, which means this has done that, and then this is simply doing that. And all of a sudden now, you could have like day trade, day trade, day trade, day trade, okay? And then you do swing trade. Meanwhile, this is your position trade. And you might find on June 20th that you have all your day trades, one or two swing trades, and your position trade all hit 123.80. And what do? You take profit on everything and you go to the beach. Lobster and champagne every morning for breakfast. Okay? Yeah. Do I know that they're all going to work out that way? No. So if you're so bold to go here and this one collapses on you, this is going to come up, and then that one will collapse on you. So you have to do your job. Okay? And one of the points to doing your job is all of that is bullish. Do we have a bearish threat? Where would the bears sell? Okay? And are they in control? And at some point, if you see something like that, this could be a big problem because we may never get there if bears take over. Okay? And why would that happen? Stock market comes down, Fed does something, and the market wants to do that. Well, then the market will do that. Okay. Postman says, what are my projections on the next CPI? I don't really care because of the base challenges. So who cares? I'm more interested in what the Fed wants to do. And the Fed says all that because of the base errors, it's transitory. So I'm with the Fed. If the Fed ain't going to use it, I don't really care. Okay? Okay? So but it's a good idea to pay attention. So why don't I do this? I change it to position trading bearish bias, and I see that there is a massive challenge by bears. So if you're stubborn because you think you're right, or because you're like, Wayne told me this is going up by the June Fed meeting, so I'm going to blah, 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 blah. Well, first of all, it's your money. Make your own decision, right? But you have to recognize that if there are bears in the market, they would sell here. That's what I've actually taught you. My opinion's irrelevant. If there are bears in the market, they would sell this price. That's what I've taught you. So you need to perceive this as a real threat. They sold it at the exact right time, right? June 1st, at the exact right price. And their intent is take this down. Okay? You see it? Clear as day, right? Okay? So what does it mean then if we end up doing this instead? We've destroyed those challengers. Okay? Postman says it's not. Well, it has to be, because if last GDP, let me make up a number. Last GDP was -6 and our current GDP is 3. What is the change? Right? What's the delta? It's some ginormous number. Okay? So mostly what I would look at, and the Fed is probably doing something similar, what was the long-term, let's say the 5-year average before COVID? Okay? And what do we have now? Okay. Okay. Postman says the Fed is late, inflation is permanent. Beige Book says that. No, it says it's transitory. So, for example, here's what I do. This is what the Wayne do. I called a factory in Michigan that produces aluminum products, aluminium for Europeans. And I said, I'd like to make a big order, but I need it quickly. And they said, well, we can't do it quickly. And I said, why not? They said, well, because of COVID, we have been working at 20% capacity, and inventories are low, if not actually out. We're out of inventory, but we are manufacturing, and we're getting our workforce back to 100%. But it has been 20%. So we don't have anything to sell you, but we're happy to take your order, but it's going to take somewhere between 12 and 16 weeks. Sorry, I was leaning in, Joey. Okay, you understand? When there is a shortage of supply, when there is a shortage of supply, demand one, and supply one. Oh, shoot. What am I doing? What the hell? I'm trying to think. Obviously, I can't multitask. All right. Supply one, demand one. Okay. I'm going to fix demand as constant, but in fact, demand is growing. And this has to do with anomalies created by government intervention. But let's just fix it. We'll just say demand is demand is demand. Demand is fine. But because of COVID, and partially because the government forced a lot of businesses to shut down, right? Another anomaly. Supply is low. S2. It shifts to the right. Shifts to the left. And you're like, Wayne, explain that for a second. All right, this is quantity. 1, 2, 3, 4, 5, 6 units. Whatever the unit is, it doesn't matter. Trillion, metric, not metric, whatever. But we went from 4 to 2. We have half as much inventory as we used to have. So I'm calling up the aluminum supplier, manufacturer actually, and I'm like, I want to place an order. And they're like, well, supply is down. You can wait 16 weeks. And I'm like, I can't wait. I have to have it now. All right, so what's the consequence? Well, the normal price is P1. The new price, because of the shortage, I'm going to have to outbid everybody and pay price 2 because I have to have it. So prices went up. Okay? So going back to Postman, right? So in the future, in 2022 or 2023, or somewhere in between, this is likely to shift back. It doesn't have to go all the way. Let's say we never quite recover. But see, demand is going to diminish too over some point of time because we're going to run out of free money from the government. But the issue is, right? The issue is we'll shift back and price will head back to normal. Maybe it doesn't get exactly to normal, but it'll get back towards normal. Okay? Because it's very unlikely when it comes to aluminum manufacturing that they overproduce. Now, if you're doing fidget spinners, as I show that, yeah, it could fall to zero. But anyways, so by 2022 or 2023, we will have normal levels of pricing. Okay? It's a supply issue, guys. Yes, some of the demand, the government created that. Okay? By some accounts, there's still 75% of the stimulus needed because 10% of America that got the money spent all of it all at once. But according to various, and I forget where I heard this one. I forget, someone was measuring something, but they're like, by their measurement in their business, this wasn't like a government agency. This wasn't a hedge fund pitching something. This was, some business had accounted for 75% of the stimulus checks were never spent from their point of view, from their measurements. So I'm like, that's interesting. So that means some people never spent a penny and other people spent all of it, but the people that spent all of it were a very, very small number relative to most people. So anyways, so the demand will remain for a while, but supply will catch up. Okay? Darko, no meeting today. Do you understand? That's what the Fed means by transitory. Okay? Demand will probably stay reasonably high until we run out of free money. So you'll have to pay more for your aluminum gutters or your aluminum fence or maybe even a car, anything, that kind of stuff. Okay? But the supply chain will be fixed. If you live in a capitalist economy, the supply chain will take care of itself because you're going to pay higher prices. In a non-capitalist economy, you will try to get it, you will pay higher prices, but nobody will work an ounce harder to fulfill your needs because it will not benefit them personally. So good luck. You'll have high prices and low supply. In a capitalist economy, an entrepreneur walks into the market and says, holy crap, did you see the price of these things? Oh, I got to get in. And suddenly you got more manufacturers entering because of the higher prices because they want to get in on it. But of course, what happens is then the supply curve shifts to the right, lowering prices and meeting equilibrium. That's why the government really, in most cases, should just get the hell out of the way. Okay? And if you're a government and you're going to call something a infrastructure package, you need to actually build some infrastructure. Just a wink, wink, nudge, nudge to the government officials. If anyone's listening, U.S. government, if you're going to spend $1.5 trillion on infrastructure, build at least one road and at least one bridge. At least. And then you can lie and call it, They're like, look at the bridge. We built a bridge. That's infrastructure. We did what we said we were going to do. And I'll say that is a mighty fine bridge. Yes, that's right. All right, cool. So, it was real. Have a wonderful day. See you tomorrow.